Stars and 2. Before we begin, Semlr Scientific would like to remind you that this conference call may contain forward-looking statements. Such statements can be identified by words such as may, will, expect, anticipate, intend, estimate, or words with similar meanings. And such statements involve a number of risks and uncertainties that could cause Semlr Scientific's actual results to differ materially from those discussed here. These risks include continued uncertainty due to the ongoing COVID-19 pandemic, risks associated with Semlr Scientific's new distribution arrangement, along with other risks associated with Semlr Scientific business. Please note that these forward-looking
statements covering Smlr earnings
opinions only as of the date of this presentation, and undertakes no obligation to advise or publicly release the results of any revision to these forward-looking statements in light of new information or future events. Please refer to Semlr Scientific's SEC filings for a more detailed description of the risk factors that may affect Semlr Scientific's results and these forward-looking statements. During the call, Semlr Scientific will also discuss certain non-GAAP financial measures, which illustrate the effects of inventory.
Hey, what's going on, Simeon?
Hey, just joining. How much did I miss?
No, it's just starting right now. They're just doing their announcement. So Smlr is an interesting company. I talked about this company last year. Didn't really have much coverage, and what I liked about it was that they have a solution for a problem in the medical world. So there's a disease called PAD, which is peripheral artery disease, and it's very underdiagnosed. Like, you know, it's called like an occlusion in your veins in your leg, and it can cause strokes. And they say that the majority of people that have it, you know, don't get diagnosed with PAD because sometimes you don't have symptoms, and if you do have symptoms, they send you to a specialist, and you have to do like a ABI test, which they put like blood pressure cuffs on your legs, and they measure they get an ultrasound to measure the blood flow. And if there's like an occlusion, then they have it. So they have just kind of like a sensor that they put on your fingers and your feet, and instantly, like within 5 minutes, it measures the blood flow, and it can tell if there's an occlusion, and it can diagnose the PAD. So over the last year, they've been getting a lot of coverage, a lot of positive coverage. People are starting to discover it because they have no debt. They keep about 80% of their revenue. Like their return on equity capital was over 100-something%. It's like ridiculous, like their numbers. So they have the potential as they grow to keep their revenue that they're making. And just some facts. So over the last 2 years, they started 2016. They had about 7 million in revenue, then 12, then they dropped to 21, 32, 38. They've been on the upside, and they've been profitable.
Revenues were higher by 37%.
So let's listen here.
Increasing to $53 million. Net income was higher by 23%, increasing to $17.2 million. Cash at the end of the year was $37.3 million, increasing by $15.2 million. Now, Andy Weinstein, our Senior Vice President of Finance and Accounting, will describe our financial performance in more detail. Andy?
Thanks, Dennis. Please refer to the financial results described in the press release that was distributed at market close today.
Let's see,
For the quarter ended December 31st, 2021, compared to the corresponding period of 2020, revenue was $11.5 million, a decrease of $500,000 or 4% from $12.1 million. Operating expenses, which includes cost of revenue, was $9.8 million, an increase of $3.7 million or 62% from $6.1 million. It should be noted that the fourth quarter of 2021 reflects a write-down of $1.2 million of inventory due to our termination of a distribution agreement. Excluding this write-down as a percentage of revenues, adjusted cost of revenues was unchanged at 8%. Net income was $1.5 million, a decrease of $3.5 million or 72% from $5.4 million. Net income per share was 22 cents per basic share and 18 cents per diluted share, which compares to 81 cents per basic share and 66 cents per diluted share during the same period last year. Please note that excluding the inventory write-down of the $1.2 million, which accounted for 18 cents per basic share before taxes and 15 cents per diluted share before taxes, net income was 40 cents per basic share and 33 cents per diluted share. And as a percentage of revenues, adjusted net income was 23%. For the quarter ended December 31st, 2021, basic share count was 6,757,821 shares, and the diluted share count was 8,148,048 shares. Analyzing the expense categories and earnings in the fourth quarter of 2021 as a percentage of quarterly revenue, cost of revenue was 19% of quarterly revenue. Excluding the write-down of the $1.2 million in inventory, as a percentage of revenues, adjusted cost of revenues was unchanged at 8%. Engineering and product development expense was 10% of quarterly revenue. Sales and marketing expense was 35%. General and administrative expenses was 22%. And net income was 13% of quarterly revenue. For the year of 2021 compared to 2020, annual revenue was $53 million, which was an increase of $14.4 million, or 37% compared to $38.6 million. Operating expenses, which includes cost of revenue, were $33.6 million, an increase of $11 million, or 48% compared to $22.6 million. The primary reasons for this change were due to increased expenses associated with our expanding business, such as increased personnel costs as headcount increased to 124 from 86, and inventory charges such as the $1.2 million write-down in the fourth quarter of 2021 due to our termination of the distribution agreement. Pre-tax net income was $19.5 million, an increase of $3 million or 18% compared to $16.5 million. Net income of $17.2 million was an increase of $3.2 million or 23% compared to $14 million. Net income was $2.56 per basic share and $2.12 per diluted share, compared to $2.13 per basic share and $1.74 per diluted share. Excluding the inventory write-down of the $1.2 million, which accounted for 18 cents per basic share before taxes and 15 cents per diluted share before taxes, adjusted net income was $2.74 per basic share and $2.27 per diluted share. As a percentage of revenues, adjusted net income was 35%. In 2021, earnings per share was calculated using a basic share count of 6,731,693 shares, and a diluted share count was 8,138,608 shares. Analyzing the expense categories and earnings in 2021 as a percentage of annual revenue, cost of revenue was 12% of annual revenue. Excluding the write-down of the $1.2 million in inventory due to our termination of the previously discussed distribution agreement, as a percentage of revenues, adjusted cost of revenues was unchanged at 9%. Engineering and product development expense was 7% of annual revenue. Sales and marketing expense was 27%. General and administrative expense was 17% of annual revenue. And net income was 32% of annual revenue. As of December 31st, 2021, Smlr had cash of $37.3 million, which represents an increase of $15.2 million compared to $22.1 million as of December 31st, 2020. Our stockholders' equity is $45.6 million as of December 31st, 2021. We expect to file our annual report on Form 10-K on or around March 4th of 2022, which will include our cash flow statement and more discussion of our cash and liquidity. In 2021, our largest customers comprised 40.8% and 28.6% respectively of annual revenues, and 48.6% and 21.7% of fourth quarter revenues. In 2021 compared to 2020, revenues from fixed price software license fee arrangements were approximately $30.5 million, an increase of $4.8 million or 19%. Variable fee software license revenues were approximately $21.5 million, an increase of $9.9 million or 85%. And equipment and other sales were $1 million, a decrease of $300,000 or 24%. In the fourth quarter of 2021 compared to the corresponding period of 2020, fixed fee software license revenues were approximately $7.9 million, an increase of $0.9 million or 13%. Variable fee software license revenues were approximately $3.5 million, a decrease of $1 million or 23%. And equipment and other sales were $100,000, which is a decrease of $400,000 or 74%. In 2020, due to the effects of the COVID-19 pandemic, variable fee license revenues had decreased sharply in the first half of 2020 and rebounded strongly in the second half of 2020. The inverse happened in 2021, as the first half saw increased testing volume by our variable fee license customers compared to the second half of 2021. This fact makes quarterly comparisons in 2021 to the corresponding period of 2020 less meaningful in our opinion. We believe that a new pattern in the home testing market, as evidenced by the higher volume of testing seen earlier in the year with fee per test revenue, is due to a COVID-19 related timing change in the behavior of insurance plans when ordering QuantaFlo testing from our health risk assessment customers. Notably, in January of 2022, compared to December of 2021, fixed fee monthly license revenues increased by approximately 1%, while variable fee license software revenue increased by approximately 87%. Comparing January 2022 to 2021, fixed fee monthly license revenues increased by approximately 13%, while variable fee software license revenues increased by approximately 6%. All numbers for January 2022 are preliminary and unaudited. Although we do not provide formal guidance, we are intent on continuing annual revenue growth, continued profitability, and generating cash during 2022. Now I will ask Dennis to continue the discussion and provide concluding remarks. Dennis?
At the end of year 2021, headcount was 124 employees compared to 119 at the end of third quarter 2021. We continue to operate as close to normal as possible, notwithstanding the ongoing COVID-19 pandemic and ever-changing rules and regulations. We have been a virtual company for more than 11 years, and we're comfortable with communicating and working out of our homes. Also, we have web-based training in place for our customers and are experienced in using it. As Andy mentioned, in previous years, our variable fee per test revenue was always greater in the second half of the year. We believe the new pattern for variable fee license revenues in 2021 was due to effects of a COVID-19 related timing change in the behavior of insurance plans when ordering QuantaFlo testing from our health risk assessment customers. However, we do not know if this newly observed pattern will continue in 2022 or in future years. Our R&D goals are to continue to upgrade the existing product and data services, to commercialize other internally developed services and products, and to in-license or distribute new services and products which we believe can provide enhanced value to our customers. In the fourth quarter, as Andy mentioned, we terminated one of our distribution agreements with a private company. But as previously announced, we began adding customers to a new product that we are distributing, Insulin Insights. Insulin Insights is a software program that a healthcare provider can use to optimize outpatient insulin dosing. We previously made an investment in Melodus Health in October 2020, and in April 2021, we we entered into a distribution agreement pursuant to which we prepaid for $2 million of Insulin Insights product licenses. By the end of the fourth quarter, we signed up several customers for this software product, and the service to these customers may begin in the first quarter of 2022. We also made investments in fall 2020 in another private company, now known as Synapse DX, whose product, Discern, is a test for early Alzheimer's disease. Our new initiatives are early and not yet material to our business. However, we believe our current products and services and any future products or services that we may offer position us to provide valuable information to our current and growing customer base, which in turn permits them to better guide patient care. We also believe that PAD testing has potential to become standard of care. In February 2022, an independently conducted, peer-reviewed clinical study was reported that used QuantaFlo for the prospective screening for undetected and asymptomatic PAD in a Medicare Advantage population with 3-year follow-up. In this study, 13,971 patients were tested, and 31.6% were found to have PAD. In positive PAD patients versus negative patients, there was an increased risk of 60 to 70% for all-cause mortality or morbidity at 1 year, and a 40 to 50% increased risk of all-cause mortality or morbidity at 3 years. The authors concluded that a positive screening result of previously undetected lower extremity PAD was independently associated with short-term and long-term increased risks for mortality and major adverse cardiovascular events, MACE, in individuals aged 65 years and older living in a large metropolitan area. Furthermore, they added, a positive PAD screen with QuantaFlo has the potential for PAD risk management at the population level. Smlr Scientific believes that this study supports the use of QuantaFlo and highlights the benefits that the product brings to our customers and the patients they care for. Thus, it may drive further adoption of QuantaFlo by existing and new customers. Overall, we believe annual revenue will continue to grow in 2022 because of increased numbers of installations of our product, more usage of our product, and recurring revenue from the licensing businesses. Our goals continue to be to make new additions to our customer base, to expand orders from existing customers, introduce additional products to our customers, and to further establish our QuantaFlo product as a standard of care in the industry. In 2022, Smlr Scientific expects continued profitability and generation of cash from operating activities. Operating expenses are expected to increase from current levels due to wage inflation pressure in the job market and our continuing desire to build infrastructure to support new business opportunities. We believe that the market for vascular disease testing is larger than our current market penetration, so there is room for continued growth. We continue to invest in R&D with the goals of providing new products that enhance value to our customers now and in the future. 2021 was a record year for our company in terms of revenues, net income, and cash generation. We are optimistic for the future. Thank you for your interest in the company and your continuing support. Now, operator, please open the lines. Doug, Andy, and I will be happy to address your questions.
We will now begin the question and answer session. To ask a question, you may press star then one on your telephone keypad. If you're using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, star then two. At this time, we'll pause momentarily to assemble our roster. Our first question is coming from Brooks O'Neil with Lake Street Capital Markets. You may now go ahead.
Good afternoon, guys. I have a couple questions. I guess I'll start off by just asking if you can provide any color on why you terminated the distribution arrangement that you highlighted.
Hey, Brooks, how are you? We felt that our attention was better served to the products that we've highlighted today, and so that's where we're directing our attention.
Okay, makes sense. And then maybe you highlighted some of the dynamics in January in terms of the business. I'm just curious if you see anything about the fixed fee business.
All right, so far, it's really not what I wanted to see. They're still using kind of like revenue, their revenue dropping due to COVID. So just to give you a heads up, Simeon, so the way this company makes money, they have that device. They don't sell the actual device. They sell the service to use the device. And either you have an annual subscription or a pay per use. So their annual subscription, which is actually, they don't sell to providers. They sell it directly to the insurance, and then the insurance sends it to the providers. Now, the reason they do this because they found that by using their device, and the reason that they're so user-friendly, insurance-friendly, that they can prevent long-term diseases, right? So just to give you a picture here.
Yeah, an insurance provider will do anything that's cheaper, but prevent
Yeah.
long-term paying out.
Yeah, so if you have PAD, right, you have this plaque buildup, right, in your legs.
Yeah.
And what, the thing is, it's asymptomatic half the time, meaning that you can have it going on. Like, let's say you're African-American, you're obese, you're diabetic, all those things increase your chance of having this without any symptoms. Now, if it's left untreated, after a while, it can turn into a stroke. It can turn into a heart attack. It can turn into even an amputation. They have like a large percentage of amputations are due to not diagnosing this. So what this company did, instead of sending someone to a specialist and trying to do that ABI program, they can just put the pulse ox thing on your finger. The doctor could do it in their office. And after a few minutes, they can diagnose it. It's a really great concept, and there's nothing like it. The closest thing to it is Medtronics. And I wanted to ask them that if I don't know if I'm online to get the question, but Medtronics right now, they have a device that they purchased from another company where they can like follow free cash flow. Free cash flow, free blood flow. I'm thinking numbers and everything at the same time. Hold on.
Our next question comes from Kyle Bowser with Colliers Security.
So the Medtronics one follows like blood flow that's going on, and they actually use it like during surgeries, just to make sure that the blood is flowing, right? So they monitor blood flow, but it's not being used to diagnose PAD at this moment. But at any time, Medtronics is a big company. They could, if they want to, kind of like turn it around and use it to diagnose PAD, which would give big competition to these guys. So these guys, SMLR, they have a lot of risk that comes with them. One, if Medtronic starts diagnosing PAD, that's going to be a big risk. As we showed that the majority of their business is to customers, and it's insurances. I think one customer is 40-something%. It was here somewhere, and the other 20 or 30-something. I think you had it before. Yeah, right here. So the two largest companies. Yeah,
that's
this
a horrible concentration problem,
Yeah, this company is SMLR. So I talked about this like last year. It's just an interesting company, and I think long term they're on the right track. But they've had a couple big hiccups with COVID, and the revenue has gone down, which is not what everybody wanted to see.
But why would they have problems with COVID where comorbidities were actually highlighted as a problem? Like, wouldn't the company that easily prevents things like that and just give the insight, wouldn't it be a good thing?
It is. So the thing is, it's like when COVID was at its peak, when they first blamed COVID for their revenue drop, it was because they were stopping all simple surgeries, all simple procedures, and only doing like major things. And then these guys, they have like where they go to your house. Also, they send like a nurse to your home to do the procedure, and that got cut down. That revenue that where they're going home to people's houses was cut down.
But that sounds quite expensive to send someone, like especially like a nurse. They're quite a scarce resource at the end of the day.
I think it's more like people that have like regular nurses that go to their house. Then they have the device. Yeah, because you don't actually have to buy the device. You just buy the per usage of the device.
But it's still strange for me. Like, do you buy a usable device? Like, as the doctor, like, and every time you use it, you pay.
I think the way I envision it, right, and the way that the reason the insurances like using this company, and they get so much money from insurance companies, is because let's say you go to the doctor's office, right? And you're a person that is obese, you have diabetes, you have all these attributes that would lead you to possibly have PAD, right? And then for somebody that has, they said, what do they do? Show here. So this is the disease here, PAD. This is I am bullish on it, but nothing major has changed fundamentally. This is just something you really have to hold long term. It dropped a little bit more, which makes the price more attractive, but there is a lot of bullish sentiment on it because of what they do. So this disease here, PAD, this is a major problem in the United States and worldwide. And the reason it's a major problem because you can have this issue right here where you have this plaque buildup in your leg and be totally fine, like with no symptoms, right? And then years later, you have a heart attack or you have a stroke or you have to have one of your limbs removed because this went undiagnosed. This is a big and legitimate problem in the United States and in the worldwide. The way they diagnose this, if you are symptomatic, like if you have pain in your legs, if you have numbness, if you have like discoloration, all these different signs and symptoms, the doctor is going to send you to a specialist or a procedure, not even a specialist, to do what they call ABI. And ABI is a procedure where they put blood pressure cuffs on your legs and then they measure the blood flow. And if they see like an occlusion or anything disruption in the blood flow, then they diagnose you with PAD and then they may give you blood thinners or plaque, anything to destroy the plaque. But what this does, like, let's say if I was a doctor and I had a doctor's office and I have a lady, even though she doesn't have no symptoms, but she's a certain age and she's diabetic, I can just use QuantaFlo, which is what the company has. And it's 5 minutes. It's just like, when you go to the doctor and they put that thing in your finger to measure the oxygen. It's the same concept. They just put it on your toes and your fingers. And like in 5 minutes, you have a reading to see if there's occlusion or not. And if you diagnose it early and treat it early, then you just decreased your chances of having a heart attack, a stroke by so much, by a major, major amount. And that's why a lot of people were excited about this. I saw recently it came out on Motley Fool. I saw on Seeking Alpha, they just started covering it. So there is some excitement around it, but there's still right now jumping in. It comes with high risk. The revenue dropped because they blame COVID. And then they depend on two big insurance companies to get their revenue. So it comes with major, major risk.
But if that is not working, why would they not think about more of like a business strategy change? Because if all the insurance companies are not working and pay per use or pay per whatever they decide is not using, why not check how it will work from the other side of the business as well? Because if they actually go and try to work with the doctors, and if it's cheaper, and if you make the doctor requested from the insurance,
they definitely have to change their strategy. I think this year is going to be, to me, the most important point. This year is going to be the most important year. So this year they really can't blame COVID, because things are opening up, things are getting back to normal. So if they're not able to increase their revenue over this year, And they're kind of still losing that momentum. I mean, year over year, they're still they're still increasing. I think just people got nervous because the first few years, like if we go here,
yeah, I can see it's the revenue is increasing, but
it's they started off 2012, 1 million in revenue. I mean, you see they're on the right track. They're trailing 12 months.
It's quite incremental.
Yeah,
but that's why I messaged you. Like, what is their debt structure as well?
So they have no long-term debt. Let me give you some facts here. So they so in their growth, their cost of revenue is pretty much negligible. Like they don't have a lot of cost for their revenue. Mostly it's like selling general admin stuff. Like in 2008, their cost was like 2.7 million for revenue. In 2020 was about 3.4 million. Their gross margin in 2018 was between 80 and 90%, which is ridiculous. I mean, like they have a good foundation. If they can build on that, and just keep increasing, they're going to keep their money. Like whatever they sell, they're going to keep the majority of their money. That's why there's so much optimism around this. They have a good plan. They have a good structure. Their profits from their free cash flow. Let me lower this.
Is it possible that their numbers are like that because of their business model at the moment, and that is the only reason? Because you have the provider, you only give them if they're going to use the device. You have nearly no expenses for anything, right?
Yeah, but it's going to stay like that, right? So as they grow, the cost that is going to be on them is going to be so minimal, right? Once they give the device to the provider, that's it. Everything else is pretty much pure profit. They don't have to keep selling to them. They don't have to do anything else. And every time, like either the provider is going to do an annual subscription plan or a per use plan. So that's why they're like they said that their profits allowed from free cash flow was 3.9 million and 18 million. 10% of its market cap is in the form of free cash flow, and their free cash flow yield is about 3.96. Their return on invested capital is over 116%. And they're pretty much keeping all of their 2000 earnings. And they also have incremental return on invested capital at about 35%, which is good for compound shareholder value, right? That's what you want to see. You want to see that increased return on invested capital.
How much cash do they have?
Right now, about 30-something million, 30+ million.
30-something million, and they make 15 million a year, right?
Yeah.
Well,
so they're keeping all their cash. Their gross profit is above 80%. It's great. I mean, they just have to build on it. Stock profit analysis.
It's strange. Yeah, go on.
Stock profit analysis. I've seen some on Seeking Alpha that give it an analysis between 150 and 160. And for me, I'm a little bit more bullish because I anticipate more growth over the next year. I expected it to be slow this year because of COVID, but I expect obviously, if COVID comes back strong and if there's a shutdown, or if they lose one of their big customers, then this is going to be done. So I'm not like going all in, but I do have a small position, and I probably will increase a smaller position today. But when I did my DCF, and then I was expecting kind of like similar growth over the next few years of, this kind of pattern here. I knew they weren't going to jump 30 to 50% like they've been doing. But I anticipate about 170 is my price target. But I'm thinking way long term, 5 years. I haven't read the Motley Fool article, but someone told me about it, and they were really, really optimistic about it. And I saw recently just Seeking Alpha had like a few articles that were really optimistic about this company.
Sounds good. But still, like, how much do they invest in the business, and how much do they invest in R&D as well? It's an interesting thing, because look at their R&D number as well. That is like less than their cost of revenue.
Yeah. So their R&D, the thing is like their sell in general is the biggest cost, because they have their like what they have is like independent marketers that go out, contractors, and that's how they kind of sell their product. R&D, I mean, there's not much more, like that they're creating. This is the first time when they announced the 2 companies that they purchased. They purchased those companies like last year, and they were really ambiguous and kind of weren't clear on what those companies did. Today, they finally spoke about it. One of them is around Alzheimer's. So that's not really related to what they do. I would imagine maybe if they diagnose Alzheimer's with some sort of blood flow issues that they can possibly use their device. And the other one was around diabetes, I believe. So
Yep, correct. I heard about that. That was about diabetes, insulin management.
Yeah, so that's going to be important, right? Because diabetes and PAD go hand on hand. So that's kind of like related to what they do.
Sure.
Catalyst, I'm just looking for them pretty much to increase their sales. My biggest fear is that they depend pretty much 60% of their close to 70% of their revenue depends on 2 insurance companies. I want that diversified more. If that becomes diversified more, then I'll become more bullish on it. If their customer base expands, because they're retaining their customers, so they have a good product. The product that they're selling to the good, the insurances. That the insurance companies are the main things. If you can get in good with the insurance companies, they're going to push it to the doctors. They're going to reward the doctors for using this. So they have a good marketing strategy. So I just want them to be able to sell to more insurance companies. I want more insurance companies to adopt them. And I think if they're able to do that, then they're going to be in more and more doctors' offices. Like I said, yeah, go ahead.
One question to ask is, do you have an idea those 40% of the revenue that comes from one insurance company, does that come from everything is US based, right?
Yeah, US based. Mm-hmm.
Okay, so does that come from one state, or does it comes across all states or more states? Because if it comes from one state, that's another concentration problem, right?
Yeah.
But if it comes across, then there is the other thing of like, why are they not increasing in different states? Like, let's say there is states that for sure would be a little bit better target audience for them. And why are they not trying to do it? And also, as you said, like the thing with their salespeople not being employees, but being more of a contractors. That is also an additional layer of problem. Like, why would you not hire your salespeople? Like, you can keep them, retain them, reward them better, right? And
yeah,
that's the whole thing. Like, are they gonna take a risk on their product? If they have a great product, are they gonna take a risk, get it to a point, and would they just not grow the revenue and sell the company one day to someone?
I don't think they're going to sell their company because, I mean, they're purchasing other companies. They are kind of like increasing their infrastructure a little bit more. But that is definitely a concern. Like, why haven't they grown quicker? They keep blaming COVID, but I don't know. I think it's kind of like wait or see the next couple quarters to see if they're increasing. But that's it for the catalyst. I definitely want to see them expand more. They're just starting here in the United States to spread a little bit more, but the total addressable market internationally is huge. I mean, you're talking about 200 million people that can potentially be diagnosed or use this product. It's still very early stage. I wouldn't go all in. I would probably like I don't think I have more than 2% in this company. But it is on my thing, and I do want to increase. I really like I like the product. I just don't understand why it's not being adopted more and quicker.
Have you spoken to doctors that have used it?
I have. I spoke to one doctor that uses it. He likes it, and it's kind of like it was. And I spoke to investors relation before a couple times, and I called Smlr. And it's exactly like the way they use it. It's exactly like how I envisioned it, right? Let's say you go get checked out and you're a smoker, right? And you have diabetes. You can go in for just because you have a headache. And you to me, it's like my vision was, okay, you have the tech or the nurse that takes your weight, takes your blood pressure, takes your pulse ox, maybe takes some blood work or whatever. I was saying, like, in my mind, it's like if you check one of these factors that lead you to risk to be someone that may have PAD, why not just add that 5-minute test to the blood pressure and the weight? And if you find something, bro, we just saved your life, like on a quick, diagnosis that has nothing to do
but
with why
you're looking at it from the different vantage point, and you know that at the moment is the insurer that has to agree for it as well.
Well, the insurance wants it for that purpose because
but do they grant blank use if appropriate?
They grant if you're not symptomatic, but if you fit if you have like diagnosed, if you fit the profile,
Gotcha.
And the doctor gets rewarded for it, right? Because when you get paid for insurance, if you're like on certain Medicare insurances, either you get paid for procedure, right? So you get paid for doing the procedure, or you get paid for a patient that has a higher illness, right? Like they give you a certain insurance, like Medicare, sometimes they pay, if this person's a diabetic, you get paid, let's say $1,000 a quarter, right? Let's just say, for example. Now, let's say you find another disease, like, okay, this person not only a diabetic, now they have high blood pressure and they have PAD. So now they're going to pay you $2,000 something per quarter because you've diagnosed them with something else. So those are the two ways they get paid, either by procedure or finding a disease. So if they find it's a benefit for the doctor finding a disease because they get paid more. But yeah, I mean, I think it's a good concept. I'm still bullish. I really thought that, they were going to get over the whole COVID thing excuse. It did drop after they saw the revenue.
Can you go back to the numbers?
Yeah.
Well, you can see that like they're growing. 2020 in December, and do you have any numbers for the first quarters of 21?
Yeah, I think it's in their statement here.
Because the thing is, like, if they're jumping 20-30%, and suddenly like.
So for 2020, they made 38 million. In 2021, they made 53 million.
That's a great jump.
That's a big jump. Yeah. I think it's
they cannot blame COVID on that. Like that's 40% or something like that.
That is, it's a high jump, but like investors are upset that it's the last 2 quarters the revenue has been slowing down, right? So people, like, if you look at it from a quarterly, and then like just like some like. It can be just like regular everyday investors. They want to see big jump. They sometimes see like a lower estimate of EPS and they all sell, but like they wanted to see the every quarter like it's been increasing. And then like the last quarter, you see here, this 2021 September was the first quarter where they didn't beat their previous quarter. Gotcha. And now they did the same thing again this quarter, and that's what caused this little drop here from 72 down to 59 or 60. So I don't see it as a it's a big drop.
That's quite a lot.
Yeah. So it wasn't the news. I mean, like myself, I wanted to see the revenue increase, the quarterly revenue increase. The yearly, from a yearly aspect, they're still doing better than last year. But yeah, that's it.
Still, they sound like a great company, but I have a few categories I don't mess with. Medical devices is one of those. Like I can buy, like, let's say a company like CVS because they're a pharmacy, and I have an idea how pharmacies work, and when I can go and open the door of the pharmacy and see like, oh yeah, 5 out of 6 pharmacies are always rammed. Okay, like there is customers, like at least I can do. Medical companies, like it's gonna be a lot harder. The same way I don't do tobacco or alcohol.
Yeah, no, I understand that. It's not for everybody. For me, like I believe in the technology. I think that overall in the next few years they're gonna do well. I don't like this slowdown, to be honest with you, and I don't understand it because I know that it's well received. I know that it's easy to use in the doctor's office. Like the traditional test.
It's the business model.
Yeah,
and also look at the incentive when it comes to the insurance side, using the well-established current model and their model. Like how much would the doctor receive when using the procedure if they're paid by procedure? Because then it's as you said, like the insurance would pay if you use it only, right? But then if they they slightly tweak the business model. And at the end of the day, if it's a great tech, someone is going to come and sweep it in.
Yeah.
Because they have the distribution, they have everything.
And they did a study and they found that insurance companies overall are going to save hundreds of millions of dollars if this product is used. So
someone's going to buy it. If it doesn't grow, someone's just going to buy it on pennies on the dollar.
Yeah, I like the product. I wouldn't say I'm very bullish on it, but I'm bullish enough to have just under 2% of my portfolio in it. I probably going to increase that to 3% or 4% now that it dropped even more. Some of the paper hands, and I think honestly in the next 5 years is, you know, I'm definitely going to see an increase in my investment. I believe I feel comfortable with that.
For sure. The thing is, like, the thing that the company is aiming at is something that is worldwide problem.
Yeah.
So if you have anything to help with insulin or with blood pressure problems, you're more or less like bang on the money. And they're kind of like, I think that's their reasoning about the insulin devices and the insulin investment. If they can get two of them together, it might be an easier sell.
Yeah.
But also, again, like, have in mind the highlighted problems within the model. If you as a person who's bullish is already on that side.
Yeah, and I'm pretty interested to see how are they going to play a role in diagnosing Alzheimer's early. You know, that's going to also be interesting, them purchasing that company.
I think every medical company that thank you.
Okay, take care, Chris.
Every medical company that has some cash laying around would try to go into Alzheimer's, because at the end of the day, someone is going to make the big breakthrough, and that's going to skyrocket.
Yeah, for sure. But and then like, I don't want them to turn out like EXAS. I don't know if you're familiar with EXAS. Like, they're a company, they try to diagnose cancer and a whole bunch of things, and they bought a lot of companies over time to diagnose all different types of cancer, and they haven't had like it hasn't been working out that well. You know, it looked good on paper, but you see kind of like they have peak here 159 and they've just been dropping. But when, you know, I don't know.
But is that because someone, let's say, didn't get a patent, there was bad studies or something? Because the thing is, like, also have in mind how much time it takes for those researches to be done at the end of the day.
It was more like some of their earnings weren't as favorable as previously thought. You know, they always, like, analysts always giving these high earnings, and they weren't working out. You know, the last couple of earnings, they haven't had great earnings, and it's just been on the drop.
Even if they don't have the great earnings, if the products, as you said, like, they bought a lot of products, if the products are getting through the stages and everything is going well, they might long term be a good buy. But
yeah. Deharia. So for I've given a couple price targets that I found on Seeking Alpha and another site. They gave it 160, and I think Motley Fool also gave it up there above 140, 150. For me, I would go in very, very small because I have, you know, my assumptions are very bullish assumptions, and a lot has to happen. They have to increase. This year is going to be extremely important. The next 2 years, they have to increase their revenue. I want to see kind of like a pattern of them growing and going into more doctors' offices and more, you know, more insurance companies adopting them. Now, the reason I was bullish on them because insurance companies love this product. And that's like half the battle, right? You know, like, if you can get an insurance company to pay doctors for using your product, but this is the opposite. Insurance companies are getting doctors to use this product. Like, the majority of their sales are because insurance companies are pushing it on their doctors. So I thought that, you know, that pattern was happening every year at a rapid pace. You know, it was just insurance companies adopting it and selling and giving it to their doctors. And the last 2 quarters, there's been a slowdown on it. And they said there's been a slowdown on it because of COVID. So if I see the same pace if I see that, you know, the insurance companies are starting to adopt it more and push it more, I'm also, you know, I think they have the potential of being, you know, trading at $160, $170 based off of my DCF. I did an actual DCF, which I would have to look for. But yeah, that was kind of like my assumptions based on the growth trajectory that they were heading towards, and they slowed down a little bit. So I wouldn't go all in. You know, I would, like I said, for me, it's no more than 2% of my portfolio. It's something I kind of want to hold and just kind of wait and see over the next 5 years. And, you know, I have good confidence that they're going to be successful, but not enough confidence to go higher than 2%. Well, that's it. Hey, man, thanks for joining on. This was, you know, just a quick kind of reaction to SMLR. Thanks for everyone that jumped on. And, man, I appreciate your feedback, brother.
Oh, it's my pleasure. It's my pleasure. Just give me a little bit more heads up next time so I can read up on the company and give you some more.
I will. That was my fault. You know, like while we were like on the chat, the Zoom link, I was just like, man, you know what? Let me just do this. So, you know, it's like I thought about it while we were on the Zoom link. So it was my fault, but I will for sure next time.
For sure. What we can do is if you find companies like that, I can always play the bear case scenario. I always loved it, poking and prodding at the things. Like as a consultant, that was my job. Like, what if we do this? Like, you should fix this. You should fix that. So I'd love to the.
So since I have you now, I just thought about it. Senseonics, we can do that one next if you want to, you know, put that in your calendar. I think their thing is March 1st. Their earnings.
March 1st is tomorrow.
Is it?
Yes.
Man, look at that. See that? See my time? See, I just think about things like on the thing. We'll see. Maybe if that's enough time for you or not. I don't know. If you want to look into that one a little bit. I'm it's a company I've been holding for a long time, and it's they do like continuous glucose monitoring.
Sounds interesting. I think you mentioned it before. Unfortunately, tomorrow I have to attend something, but yeah,
no problem.
I will.
I'll keep you in mind next time. I appreciate it.
For sure. Yeah.
All right.
Take care. Bye.